The more you focus on making money as a trader, the worse off you will be. We've all been there, close to passing a funded, close to getting a payout, or even on a live account, just focusing on the need to make money every single day. When our focus is on those things, we trade much, much worse. So today, I want to talk about the only real way to measure progress as a trader with 3 easy steps. Because if we want to escape this cycle of unprofitability because we focus on the money, we need to have a step-by-step process and a true understanding of what is causing this. So getting right into this, first and foremost, we need to determine our entry criteria, right? We want to streamline our entries as much as we can. So in turn, at the end of a trading day, we can determine whether it was a successful trading day or a bad trading day. Okay, so number one, we need to have a clear directional bias. Now, if we do not have a clear directional bias, then it should be simple. We take no trade. Now, we're going to get into much more, but even that first sequence that we just went through, not having a clear directional bias, meaning no trade, most traders cannot sit through. They open the charts pre-market. They open the charts ahead of 9:30 New York Open. Whatever trading session you are involved in, they open the charts and can't determine whether they want to be a buyer or a seller. Okay? Already, if that is occurring, you should not be taking any trades. And all of those days where you're unclear on the directional bias, filtering out all of those more likely than not losses when you don't have a clear bias, already you're starting to improve your trading. So we want to weed out these poor trades by understanding less is more. Now, let's assume that we do have a clear directional bias. Okay, then what do? We ask ourselves, is the model present, right? We don't just determine that we want to be buyers today and that's it. That's the end of the equation, okay? After determining bias and asking ourselves, is our model present? If it is not, same thing, no trade, okay? So bias has to meet the model, right? All pieces of this puzzle have to come together. If the model is present, of course, then finally you should put on the position and you should take the trade. Okay. And that's just trusting your model. Now, understanding this main framework again puts us in a really good place to be able to gauge progress in our trading, right? Everybody says you should journal. Everybody says review your trading. Have you been doing good this month? How are you tracking your stats, your KPI? All those things are important, but we need to understand the basics of how us as the trader, not focusing on the monetary aspect of it, which of course it is important, but in order to grow that monetary aspect, to grow our accounts, we need to focus on these things that we're discussing. Okay, so laying that framework out here, let's move forward, okay, and paint this picture even further. So what is a successful trading day? Is a successful trading day just green and every red day is a failure as a trader? Every red day means we screwed up as a trader? No, of course not. So let's talk about here scenario 1, if it wants to let me grab this, okay? We want to ask ourselves those 3 questions. Clear directional bias, if we have that, was our model presented to us? Do we have that? If it was, then our job as traders is to execute on our model, our trusted model that we have repeated over and over and over again. It doesn't even have to be the same model as mine. Whatever model you use, whether it's VWAP, ICT concepts, silver bullet, support and resistance, whatever your model is that you've traded before over and over again that you are comfortable with, if you have that directional bias and your model's telling you to enter the trade, your job is to execute, okay? The second scenario I want to focus on here, okay, on top of this, do we have a clear directional bias? Now, this is important, and this is where most traders cannot succeed and where they fall apart. Do you have a clear directional bias? Yes. Let's stick with the same example. We open the charts. We determine that we want to be buyers, that we are bullish. But was our model presented to us? No. Then should there be any reason for me to execute on a trade or by extension my model? No, because it wasn't given, right? There's plenty of times where I have the bias correct and I have to wait for the model, but it's just simply not given to me every single day. And that's trading, and you have to be okay with that. Okay, so both scenario 1 and 2 are proper performance. And what is the perspective about this? What is the framework around these first two scenarios? They are process focused. They're not focused on the outcome. Okay, now let's progress further and talk about right here how we can categorize a bad trading day. Okay, so scenario 1 for a bad trading day, if the charts close and we look back on the day, how can we determine that it was not our best day? We're asking the same 3 questions, but again, this is where most traders go wrong. You have a clear directional bias? No, I don't. Was my model presented? It doesn't matter if it was or was not, right? You should not be executing a trade. So if you don't have that number 1, that first question sorted out, there should be no reason for you to execute a trade, whether or not your model was given or not, right? Because I'm thinking in terms of a pattern sense, just pattern trading. You need that directional bias. You need that higher time frame structure and narrative around your lower time frame trading, okay? Scenario number 2 here, okay, the same 3 questions. Do we have our clear directional bias? Yes. Was my model presented? Yes. Did I execute a trade? No. Right? We've all been there before. Again, sometimes we're aware of why we hesitate on these executions. Sometimes we just miss it. But if we have our clear directional bias and our model is given to us in the time period in which we are trading, that's when you have to trust your model and execute. Right? Now, both of these 2 scenarios, why they are bad trading days is because they're both outcome focused. Now, of course, there's different variations of scenario 1 and scenario 2 from a successful trading day and scenario 1 and scenario 2 from a bad trading day. But this is the main framework. And again, we want to be process focused, not outcome focused. Okay, so let's go even further and break down what causes a bad trading day, right? Why are we outcome focused in general as a trader, right? So number 1, this is the most important thing that a lot of traders deal with, that I dealt with early on, is trading out of desperation. Trading out of desperation. You feel like you need to impose your will on the market. You feel like you need to control the market. You feel like the only way for you to be happy and feel like you're making progress is to put on a trade and try to get a winning trade, do or die, right? And when you're trading out of desperation that you need to make that money, and we'll break this down even further, it's really difficult and you're putting a lot more pressure on yourself than is needed, than is necessary. Trading's already as stressful as it is. Trading is already as uncertain as it is. You don't want to get in your own way and add the need to make money on top of this as the main framework, right? Number 2, scarcity mindset. Now, scarcity mindset, what does this mean? Scarcity mindset means that the trade at hand, the trading day, and ultimately the opportunity, or even if your model isn't there, right? Let's say it was one of these days where you don't have that clear directional bias. You can spot a clear target above price, a clear target, below price, and we're just in consolidation, right? In that moment, your brain starts to play tricks on you and makes it feel like this is the last opportunity there's ever going to be. This is the last time the market's ever going to move around and be volatile. And of course, after the trading day, once we zoom out, before a trading day, when we're talking to other people, we know that those things are not true. But in the moment, again, our brain plays this trick on us and forces us into poor decisions because it's, oh, this is the only trade. What if this is the only opportunity today? What if this is the only good opportunity this week, right? Oh, I might as well just get in, et cetera, right? So we really need to avoid that. And of course, we'll go deeper into that in one moment. Number 3, tunnel vision. And that ties in as well with number 2, where your sole focus is on the current candle, right? On the current trading day. It's the only thing that matters, which it is in one sense, which we'll get into again. But your focus is on, I need to make money today. I need to make money right now. I need to do it. I need to get out of this drawdown. I need to make my profit bigger. I'm getting greedy. Oh, I just took a break even. I need to get back in because this move was mine. What if it takes off without me, et cetera, right? We need to really zoom out again and have a longer term vision. Number 4, fear of loss. And this really ties in with what we mentioned in scenario 2 here when it comes to, did I execute a trade? Many times, right, traders will have that bias saying it's going to go up. Then they're given their setup, whatever your model is, and then it comes to execute a trade and you don't enter, right? You have a fear of loss, right? You have that mental scar tissue from the last loss you took or the series of losing trades that you took or the losing streak that you're on, right? Those losses that you took, whether they were emotional trades or trades within your system, sometimes you're just going to lose, do not matter relative to the decision at hand, right? If you have your entry criteria, your clear directional bias, and your model being presented, it's time for you to execute the trade, right? You're going to always feel some sense of fear. You can't pretend to not feel it. You can't ignore the fact that you're a human, but you have to make the most logical decision as the analyst to get over that fear and operate accordingly anyways, even when you're scared. And once you do that over and over and over again, you'll feel that fear less and less and less with each trade, okay? Number 5, again, we've touched on this, but incorrect perspective on progress. And this is so, so important, right? With basically everything else in life, in entrepreneurship, the harder you push, the harder you work, the more things you're doing, the more buttons you're pushing, the more success you're more likely to have, right? With trading, our progress is solely measured based on our decision making, and the majority of the time, that decision that you're trying to make at hand is going to be sit on your hands and be patient and be okay with being bored, which is a skill set in and of itself, right? So you need to have that correct perspective on trading and put it on performance. And lastly here, number 6, FOMO/chasing. It kind of ties in and summarizes everything I've laid out here. You feel like it's going to take off without you, right? You're trying to make back your losses, right? You're trading from a place of emotions. You're trying to push a button just to feel good, right? Just to get that dopamine rush. And we need to avoid all these things. So understanding some of the main reasons why we are outcome focused, how can we fix these? Now, number 1, again, I mentioned trading out of desperation was one of the biggest, if not the biggest problem that most traders face and that I faced early on, can be solved with this right here. Don't rely on trading as your sole source of income as a beginner, right? Trading is already hard enough. If you add that pressure, that need to make money with trading with a deadline, it's just natural. You're going to make decisions that are not the wisest relative to what price in the market is telling you, right? If you have a week to pay rent, if you have a week to meet some sort of deadlines, right? So your car payments due, whatever it is, and you're tight on funds, you're tight on any other source of income, and you're solely relying on trading, it is so much more difficult mentally for you to trade. And in my opinion, it's just a ticking time bomb and a recipe for disaster, okay? So even tying into that, not relying on trading as sole source of income as a beginner, I recommend having 6 to 12 months of savings before you go full time. Of course, that's your decision, but if that's what you decide to do, it's just going to make it much more easier for you than just saying, screw it, let's just full send this, and thinking that you're going to be the exception. That's what I thought. It didn't go over well, okay? Number 2, we mentioned, let's zoom out for a bit, okay? Initially, scarcity mindset, but we want to have an abundance mindset. And I know it's cliche, but abundance mindset is trusting that your model will be given to you, right? Let's say it's 10 a.m. and that volatility, that move occurred without you. You have to trust that your model is going to be given later in the day. And if it is not given later in the day, you trust yourself to remain patient until it is the next day or the next afternoon or whenever it is, right? Because you know, in the moment, it feels like this is the only opportunity that's ever going to be given again, but you know it's going to be right around the corner. So there's no point in rushing into these lower quality setups just to scratch the itch of putting on a position, okay? Number 3, again, this one's pretty straightforward. Tunnel vision, we don't want to have that. Number 3, we want to have a longer term perspective, right? You want to make these proper decisions and build these good habits and stack these winning days, again, relative to your performance as the trader, not the outcome, okay? The more, again, the way I started the video, the more you focus on the outcome and making money, the worse you are going to trade. And we need to trade well to make more money, right? So we have to put our focus on the process. We have to put our focus on performing well as the trader, okay? Number 4, accepting losses. They are inevitable, right? You can't have a fear of loss, or you can, at least you have to have a healthy fear of loss relative to just risking properly. But you have to understand that you're going to have losing trades. I'm going to have losing trades. Everybody has losing trades. Don't feel like just because everyone nowadays claims that they have a 92% win rate on the internet, if you take one bad trade or you have 60% win rate or 50% win rate in 1 month, means you suck as a trader. If you have your proven model, some of those trades, even with that proven model, are going to be unfavorable, or in other words, a loss, right? So if you understand they're inevitable, when it happens, there's no need to freak out. And of course, it's easier said than done. So you need to have things in place like max trade per day rule, max loss per day rule, right? Mine is if I take 2 losses in one intraday session, then I just accept that I'm wrong. It's not my day, and kind of ensure that I'm not going to dig myself into a further hole than I need to, ensure that I'm not going to get emotional about the rest of that trading session. And I'm comfortable. I don't need to make that back in the same day. I'm not in sync with how the market's behaving. All of these things, I can accept that and just wrap up shop. And that prevents me from tilting even more, digging myself into a deeper hole, right? And the flip side of that is, where's my focus? On the outcome or the process? On the process, where it needs to be, okay? Number 5, okay, we mentioned most traders have an incorrect perspective on progress. Progress, the right way, is following a system with the opportunity at hand, okay? Whatever system you use, again, we need to follow that when the market is telling us what to do, okay? If I don't have a clear draw on liquidity, a clear directional bias, then I can't take my pattern model, right? That's a scenario where the market's telling me what to do, right? If I have a clear directional bias and then my model is given to me when I'm looking to trade, then my model is telling me to do what? Execute the trade, right? So at all times, we need to focus on what our system is telling us. And for me, the majority of the time is just waiting until it's super, super clear. Okay, I'm bullish. I came in today with a bullish bias. Here's a great long setup with my my model, my system at the time of the day that I really want to trade. Boom. That's my job. Okay, I control what I can control. I can't control if that entry goes right to my stop loss, if it goes right to my first take profit and the rest gets stopped at break even, or if it goes all the way to my final target. I can't control those things. Nobody can. Okay, so we just need to focus on our system and controlling the things that we can control. And lastly, again, relative to all of these 1 through 6, all of these bad habits that we need to escape from, but FOMO and chasing specifically, I highly, highly, highly recommend you have a specific entry checklist, right? And you're trading with intent. And that's going to keep you from taking a lot of these impulsive, low quality trades that you can easily just convince yourself that there's a setup. You can always do that, right? How many times as soon as you take a losing trade, 2 minutes later it starts to go back up where you were targeting initially, and now you're saying, oh, it's going to go off this order block. Oh, I'm actually going to use this 30-second breaker or this new fair value gap. We've all been there, and it's natural for our brains, right? But if you have that specific entry checklist and what I mentioned a bit ago, max trade per day rule, you're in a really good place to protect yourself from these unnecessary trades, right? From putting as much confluence on your side as you can. So for me, and I have plenty of videos on the channel about this. If you guys are new, check them out. And I can go further in depth on this with one of these types of videos. But for me, I'm looking for entries 95% plus of the time during macro windows. So the last 10 minutes of the hour to the first 10 minutes of the next hour. And ultimately, I'm looking for a clear draw on liquidity, so directional bias, and an inversion, a sweep and inversion entry, right? Of course, there's more that goes into it, but when it comes down to the actual lower time frame pattern, those are the things I'm looking for with a simple checklist. Okay, so I want to trade with intent, and that keeps me from fooling myself with all of the false opportunities that are at hand throughout the entirety of a trading session, the entirety of a trading week, the entirety of a trading month, and the entirety of a trading year, right? Because remember, we're thinking long term, okay? Moving forward, the three main questions, right? So how do we look back on a trading day and understand if we're making progress as a trader? How do we look back on a trading week, a trading month, again, a trading year, and understanding if we're making progress as a trader? Well, we want to ask ourselves these three questions, right? Because we understand process is greater than outcome. And when we do that and have that as a foundation mentally in our trading, that is going to lead to greater profits, right? And you have to trust that the process will pay off, right? And you have to make your priority as a trader to ask yourselves the questions and the perspectives we discuss in today's lesson, right? Am I doing the right things? Am I following my model? Do I have a clear directional bias? Am I following my max loss per day rule, right? Am I making sure I don't get greedy? Do I have a clear entry checklist? The list goes on and on and on, okay? So that's going to be it for the video, guys. If you guys enjoyed this video, I'd really appreciate a like. It's good for the algorithm. And if you guys have any questions, leave them in the comments, and I will talk with everybody soon.